As we get into the SP 500 and the Nasdaq 100, I need to talk about a few things into what's dragging us down and the key levels you need to be watching so you are prepared to trade this market as well. I'm giving you an unbiased opinion on how we're moving on the Nasdaq and the SPY, and I'm going to go over some stocks that I'm loving as well for more downside. Yesterday, I gave you a breakdown of the stocks that I was liking and key targets on those as well, and we're seeing that kind of unfold as we speak. Also, this video is going to come out an hour before or 10 minutes before power hour, so I have to actually release it or record it sooner. I just have to get my son today, so it's a very busy day for me. I won't be able to update it later on during the day. So let's get into it. I have to ask you to consider doing two things before we get too deep into the video: liking and subscribing. One, liking helps out my channel. It helps out the growth. Two, subscribing is for you because every single day you can see I'm giving you the updates. I was calling for shorts for downside since last week, okay? Before the Fed meeting, I was calling this, trying to get people prepared, and ultimately just to preserve and protect your capital as an investor. But always, I recommend you do your own DD before we get too far into anything, and don't just take what I say as, you know, the God's honest truth or what has to happen, right? Because I'm human, I'm gonna make mistakes, I'm gonna be wrong, but ultimately you are in charge of your investing. Before we go any further as well, I want to talk about what I am in. I want to talk about what positions I closed this morning around 10:30, 10:50 when you started chopping on the market. I closed my SPY and my QQQ position. You can see where I got in, 4.63 on the Q position. Those got up to 6.35, actually got up to like 6.8. And then I ended up closing the SPYs, which I got in at 5.94 at 11 to 11.10 flat. That's where those got all the way to almost $12 as well. Now, looking at Microsoft, looking at how we're moving, I ended up getting into a Microsoft position to the downside for next week, but that's what I'm sitting in right now. And I'm going to go over why I like those positions and what I'm looking at as a broad scale market. Now, first of all, I want to talk about where we're moving right now. And I did not have this key level marked out, but that's why I run my company and run our Discord as a team with my partner, Jay Ream. His link will be down below if you are interested. He does a lot of educational stuff. I don't do more of the educational. He's kind of making content surrounding that if you're interested in educational about how we're trading. But this is our key level we have right here. And then our next one's down here at locally 11.2. But as you get in here, you can see how you're reacting here overnight. So yesterday you ended up dipping here, and to right about the end of the day around 5 o'clock, you dipped here and then you bounced actually back to your previous lows, right? And I don't know why this range was deleted, but it'd be right here. Your previous low range you had to watch. You bounce up into it, get rejected, and you push back down into the zone going on right now. Now, we need to talk about what's happening here. Obviously, when you're looking at supply and demand zones, you're expecting buyers and sellers to show up at these levels. So if you come down into your demand, you're expecting buyers to show up. If you come up to your supply, you're expecting what? Sellers to show up. Back and forth you go. And now you're pinballing in this range like you were back here. So we're looking at this and we're looking at the market from this viewpoint. I'm going to go over a few things that I have been watching. I talked a lot about the October 21st option chain. That's been a little bit slower today. And I do think we're getting a little bit of profit taking throughout the day. And that's ultimately what is kind of pushing us up here. I don't believe we're seeing all profit taking, but I do believe there is some on the market. And I do believe that's why you're not dropping drastically. And you can really tell this by looking at the volume on the day. Volume is going to tell you everything you need to know. Now, what I want to do is hop over to Bookmap very quickly. Bookmap, if you don't know, my link is down below if you want to get a discount on them. But this is something that I use as a tool to paint the picture of how the market is moving, okay? So what I want to do is just show you from this morning. This is basically this morning right here. This is where you start off around 8:30 right here. Okay, you start the morning up a little bit higher, around 38.20 on ES, and then ultimately you're pushing down. Now, what I want to highlight here is two things. First, I'm going to do the blue line, which is your hidden order book, maybe your dark pool. Think of this as level 2 data, but data that's not being shown to you on your broker, right? So more dark pool, large orders from big buyers, specifically most likely hedge funds, right? So as you get in here, these are lot orders. So if you know how much a lot is, then you understand that 1,000 lots is a very large order. So you can see as you are dipping here this morning down to your low, right? You're seeing big buy orders coming in, right? And then I'm going to go into CVD with volume here in a second, but you can see this continues basically until lunch, right? So we can see buying until lunch, very big orders. and then it stops and you lean back down towards that short side thesis. A lot more shorts coming in as the day progresses, as we go into power hour. Okay, so I'm actually going to get rid of that so you can just see this a little bit more clearly. I want to focus on the green and red line, your CVD. Okay, basically what this does, if you don't know, if you're new to the channel, CVD represents the total number of buyers and sellers, right? Not the quantity, not the size of the orders. So if you have 10 overall orders, I'm not saying one is worth $1 million, one's worth 5 total contracts. That's all this is, right? It's not putting in the factor of the size of these orders, just the number of orders coming in or specific buyers, right? Or sellers in this case. So you're seeing that sellers this morning took control, but for the most part of the day, again, buyers have taken control, right? You're pushed up for a majority of the day on your CVD. But what does this tell you as you consolidate sideways and as CVD goes up? It's giving you divergence, in my opinion, for the downside, like it has been ultimately for the past few days. Next thing I want to do really quick, and to give you a better viewpoint of this as well, is I'm going to take you to what I do. If you're looking at volume, a very simple and easy way to do it. I like Thinkorswim, but I like to show you this because anyone can do this, and you can do it on your phone virtually from anywhere, right? So I just go to SPY to see overall volume. SPY is the best way to see the market volume on the day. Go to historical data right here. And as you come in, look at what's happening. Yesterday was a breakout day. We saw increased volume, right? So as we look back at this chart again to demonstrate to what we were seeing, if we go to about the 4-hour chart, what we're looking at, we saw increased volume on the way down. And then from this period right here, right, from here to here, what did we see? Descending volume going up with a bear flag, right? We talked about this, right? And then on your way down, what happened? Increased volume, right? So increased volume on the way down, increased volume on the way down. And then as you trended sideways, what happened? Your volume descended. As we look at the day, you're sitting at roughly almost power hour at 60 million volume. I can anticipate this will get to 70, maybe 80 million in volume at the end of the day. This is just an estimate, right? Depending on the movement that entails with this. If we trend sideways, I anticipate low volume. But as this continues on, it's following a very similar trend to what we had back here, right? And I just don't think that we consolidate as long right here, personal opinion, but that's what's going on right now. So again, same trend, descending volume on the way up. It's declining, worth mentioning as well. Okay, what we're seeing here as well with majority of these spikes throughout the day so far, and yesterday, it's worth mentioning, that's when a lot of your volume is coming in on these spikes, right? And that's what I anticipate being some profit taking. For instance, if you look back at your book, looking at SPY, looking at QQQ, et cetera, what were the biggest orders? We had the 275s, the 280s. Well, the 275s got in the money today, right? And then as you look at those contracts, if you're a trader like myself, looking at the 275s, which I had, the volume on those was getting interesting because you were seeing the price of the options actually trend sideways and go down as you started to make new lows here and push back down in the money as well, as which contracts normally move the best. But the one factor here is that volume slowed down on those contracts, specifically towards the buy side. What does that tell me? That in my opinion, some people were selling, cutting and trimming some of those positions, but that does not mean you are not going to go down further. And it's important that as you come down to the 1 hour, 15 minutes, etc., it looks more and more like you're starting and trying to form some sort of bear flag once again, which aligns back with that descending volume we've talked about specifically on the day. Again, this might be a lot to take in, but again, just look back at my previous videos. They all build on each other, and I really try to keep it very simple for you, the viewer, so you can learn from this as well and basically trade on this as well. It's not a super complicated formula that we use. And again, if you're interested in learning this, J-Ream teaches a lot of this down below as well. And we go over this in Discord again as well. So looking at Nasdaq, where you're bouncing at this range, but you're still below the daily open. I still think you're extremely bearish here. And as we go to more of a daily and longer term scheme chart, what's happening here, right? I want to keep reminding you of what we expect. From these big supply and demand zones, we always anticipate a bounce originally, right? This is your first touch on the day here. So I don't think you're just going to break and just go straight through it, but I don't think you're just going to bounce back to 12,000. It's worth mentioning I had a lot more money on the market yesterday than I do today. So for instance, my two major SPY puts that I had going into last week and this week, those were over $10,000 each. Today, my position in Microsoft is a little bit under $3,000. So that just shows you that as you're going down and you're getting closer towards these lows, that I have to reduce the amount that I'm willing to risk here because the total amount of profits that I'm going to get here is going to get slimmer and slimmer, right? And that's not factoring in making new lows because we can't really anticipate exactly where we're going to go on these new lows. We can just use some previous data and make educated guesses on those levels as well. So that's what I'm looking at here. Going into NQ, SPY, that's my overall targets. What's happening? You're bouncing out support. You're trying to get some love here, but ultimately you can't get above 11.6. We've gone into bookmap as well. Cheddar flow, looking here, looking at SPY. Again, I wanted to show you some of the premium here. It's a lot more mixed today. Some of your orders were a little bit bigger, 2.7 mil to the call side. Again, 2023 in a weekly. These are not necessarily bullish positions in the short term. Yeah, you got a, contract into tomorrow. You're expecting a little bit of a bounce, but there's not too much big bets coming in the short term over the next month, 2 months, right? If we're getting big bets going into next month, that's people putting their money where their mouth is and betting over the next 30 days for more downside. If you're betting for just a quick bounce, they would be going shorter dated, and that's not what they're doing here. They're establishing their money to more dated positions, and that's what's happening now. You're seeing a lot of January contracts come in, November and December. October's almost maxed out, if you will. I recommend going and looking at the October 21st chain. It's pretty horrendous. It's pretty terrible. It's very bearish. So I want to highlight that specifically. Coming back into QQQ here, very, very bearish. I mean, you haven't seen any major huge orders, but it's a lot of bearishness here. And again, it's a lot of favor coming into January and some further dated puts as well into the year after this as well. So that's what I'm looking at here. Going into SPX, the day traders, you have basically you have $1/3 of $1 billion towards the put side here for January and for December of this year. That's extreme. Think of that, people. $1/3 of $1 billion betting towards the downside. Is it a hedge? I don't know, but I'm just telling you where the money's going and what's happening. And these are pretty far out of the money. 3,400 on SPX and 3,600. If you want to look where you're at right now, SPX is at 3,700. So it's worth mentioning. These are pretty far out right now, and they're expecting more blood, more downside in the coming weeks and days as well. So that's what I'm looking at there. And again, just sharing with you the data, sharing with you what I'm looking at, and sharing with you what I'm following. Even right now, you're seeing a little bit of a push above 11.6, but ultimately what I'm watching for a quote unquote reversal here is coming back to the 15-minute is, can you get above the daily ultimately, which is 11.66, and can you get above 11.7.8, your previous lows that you established? Those are big areas, right? I want to make sure that's very, very focused on, right? So this area right here, about to the daily level, mark it on your chart. Right there, that's going to be your first line, first resistance, and then ultimately 11.78 to see any type of reversal to really get out of any of your trades or any of my trades personally. That's what I'll be watching for. Going into some of these big fundamental viewpoints, I want to talk about this. J and K, what happened on the day? Going to the 4 hour, you made a new low from June. We've been talking about J and K a lot here. New low established, boom. You made it. You bounce out of here, but it's still worth mentioning you're still in this key level, and it looks like you want to make more lows here as well. DXY, your dollar index. This is probably the only reason you're not absolutely dying on the day, is DXY did get a bit of a dip, but it's slowly coming back to these highs as well. It's worth mentioning. I think DXY will continue this run and continue bullish over the next few days and weeks as well. It's worth mentioning that you've continued to make new highs here. Also, really hurting the euro. The euro is, I think, worth 98 cents right now, which is a really big surprise looking at broad scale markets. Next up, I want to talk about the US 10 versus the US 30-year yield. This is something we've been talking about a lot on the channel, the ultimate indicator for inflation, and you have made new highs here, right? I want to highlight how important this is as well. If we go back to the weekly, I want to go all the way back towards 2018, 2008, and then ultimately 2000. You can come back here, right? New high from there. I'm not even going to go over that. I've covered that yesterday's video, so I don't want to cover that. You made a new high from the housing bubble on this inversion, and then you're on track to get to the .com bubble highs. And you're moving quick, people. You are moving quick and you're moving vicious. This is something to keep on your radar, and I think it's just heating up. Yields are going crazy, and I think more downside is upon us. But again, I'm not overextending. I made a bulk of my money over the past 2 or 3 days, and now I'm kind of just riding the trend, following some of my favorite stocks, okay? So I want to make sure that part's all established, all focused. Again, I want to highlight, I have closed out the largest portion of my positions. I'm still short, but I'm not over leveraging towards that downside, right? What am I doing? What is the basically anthem of this channel? It is reduce risk at all cost and put yourself in a situation to make sure your reward outweighs your risk. You're getting into an area to where reward might start getting underneath risk, right? And that's never a good case scenario, but it's worth mentioning. I still see downside. I'm still trading to the downside, and I'm getting time of my positions as well. Now, let's look at some of these stocks that I've been talking about and loving. First up, Microsoft on the 5-minute chart. I'm going to talk about this, why I traded this, why I love this. Microsoft, you're sitting below a key level. What is your key level? Let's talk about it. Let's go to 4-hour chart. You're sitting below your local previous lows and your weekly level right here. This was your previous low that you had established on September 16th. You're sitting below it and getting rejected continuously. Also, you're now sitting in this range, this demand level below, retesting it now as a resistance, which was established on June 10th. Okay, very similar to our Facebook play when we talked about there, right? So what's happening here? What do we always look for? We look for a breakdown, a move back up, and then a move back down. And this is where you want to get into your position, right? On the retests. I practice what I preach here, or at least I try. That's why I like Microsoft. That's why I'm trading that one right now. Meta is a great example of this. Look what happened here. Again, you didn't really get your retest to a T, but look what happened. You break below your low that you established back here. Actually, you did get it to an exact T. It actually happened right there. You can see you break below this low, you retest it, and then you start pushing back down to new lows, ultimately coming towards our target of 137 here on Facebook, aka Meta. Looking at Tesla, we talked about this one yesterday. What did I say? There's 3 overall targets from this descending wedge. Step 1, 290. Step 2, 280, then 266. I also want to mention what happened in Discord. What were we looking at? Jay Ream, he was trading this. Now, I only usually mention a lot of my trades. I don't go too far into Jay Ream's trades, but he's been killing it as well. He's been doing AMD, absolutely destroying. He's been doing NVIDIA. He's been trading Tesla. A lot of these and trade ideas as well. Trades all day long going over these as well, breaking down exactly why he loves them. But now you're flipping and you're holding below 292 and 291, which in my opinion shows more downside is coming here as well. Some of the big boys too, like Apple. Look at this. You're finally getting pain here. But it's worth mentioning, Apple, one of the strongest stocks in the market. You are trying to push a little bit back up. But what is the pattern going on here in my opinion? In my opinion, you are just flagging, preparing for more continuation. And you have to take this as preparing for more continuation until we can break the trend, right? And where does that happen? It comes back to our indexes, the bread and butter of what we watch. Can you get back above key levels? And so far, you are not. Right now, you're getting a bit of a bounce. This is what I'm looking at. This is how I'm playing the market. If you have questions, please ask down below. I'll see you tomorrow.